So thank you very much. I'm Fernando Restoy, Chair of the Financial Stability Institute here at the BIS. I'm delighted to chair this session on the links between financial inclusion and technology. Of course, this is quite a topical issue in the ongoing debate on how to best embrace the benefits that technology could bring to the financial system and society at large, while at the same time, of course, addressing the relevant risks. I think we don't need to motivate much this panel discussion. You have the figures in your mind. According to the World Bank Financial Inclusion Index, around 1.2 billion adults gain access to a transaction account between 2011 and 2017. Unfortunately, we don't have yet more recent data. And most of this progress was driven by new digital technologies. Certainly in several markets across sub-Saharan Africa and Asia, mobile money, agent networks, payment application, and QR codes have significantly improved access to and use of digital payment channels and accounts. So improvements to financial infrastructures has provided the foundations needed to significantly increase bank account penetration. However, barriers such as poor access point coverage and low levels of financial literacy continue to limit access to financial services for vulnerable groups. In fact, whilst digitalization has offered many solutions, the decline of cash and the closure of physical branches raise new risks for financial inclusion moving forward. So today we are going to discuss these issues, in particular, how the public and the private sector could work together to facilitate additional financial inclusion, so to safely bring the remaining 1.7 billion people into the formal financial sector. We'll be highlighting successes to date and also learning about innovative solutions for the future. So for that purpose, organizers have been quite successful in bringing together three relevant speakers, three relevant experts on this important domain. So let me just mention, because they don't need actually large introductions, Elsie Addo Awadzi. She's a second deputy governor at the Bank of Ghana. Siritida Panomwon Ayudhya, who is assistant governor of the Central Bank of Thailand, and Tanja Heßdörfer is director of business development on central bank digital currencies at Giesecke+Devrient. It's a consulting company. So the way we have structured this session is by trying to promote as much as possible interaction among the panelists. It's a sort of a conversation. It's not a series of speeches. So we want actually, by means of this conversation, to try to shed light on other relevant policy issues around actually this very topic on the links between technological developments and financial inclusion. So let me start with Ghana. With Elsie, Deputy Governor at the Central Bank of Ghana. So Elsie, thank you very much for joining us for this panel discussion. I think you will agree, as a regulator, that the tech-driven financial inclusion comes also with some relevant new risks. You have seen success in how innovation could actually facilitate financial inclusion. So therefore you have relevant experience to let us know how you feel this balance between risks and opportunities, how you manage actually to be able to sort of optimize the opportunities while at the same time addressing the relevant risks. So also thank you very much again for coming. The floor is yours now.
Thank you, Fernando, and best regards to everyone on the panel. So you're right about the fact that technology and digital financial services have been a big game changer for us for many things, but in particular financial inclusion goals as well. So I won't go back to the numbers, but it's just, let me just drop this number, the fact that about 82% of our GDP as of last year was held on mobile money wallets. And so that's quite significant if you see it. This is according to the World Bank. And this is a reflection of the fact that mobile money, for example, has been able to help formalize a very informal economy and brought into the fold many others that were previously, without access to finance of any sort, and that operated their businesses and their affairs solely on an informal basis. But what have been the benefits? So we've seen that the rise in access to digital financial services coincides then with increased business, more opportunities in a fast evolving digital world, where men and women and young people in every corner of the country that have access to a phone and digital financial services can actually transact business across not only the country, but beyond the shores of the country. And so that has opened up business. It's provided more convenience. And as I said, it's provided benefits for the entire economy. The risks are also quite significant. We have seen risks, including the fact that there's increasingly quite a bit of fraud in mobile money transactions, and therefore people don't necessarily trust digital financial services a whole lot these days. This is particularly the case that a lot of people who use these services are not literate, or not financially literate, or are not digitally aware. And therefore they rely on others in their households and their communities to help them operate these services or access these services. That has brought about a lot of fraud. And so we're beginning to see exclusion, where once upon a time people had access, and then at some point they're getting out because they no longer trust these services, or that one of the biggest complaints we hear is about pricing, the lack of transparency around pricing, particularly when it comes to mobile credit or microcredit delivered on mobile money wallets. And so you've seen some of these play out, and the fears that it leads to exclusion. Another reason, another risk is the fact that because of the fact that there's a big divide between those who have access to mobile internet services and then those who have access to digital financial services, you've seen a growing divide in terms of those who are able to actually benefit from these services and those who are not able to access, either because of lack of infrastructure or lack of affordability. And so that's also a growing policy concern. And then there are risks in terms of cybersecurity risks that we're concerned about. With the increased use of digital financial services, we're seeing a lot of cyber threats, and these have broad ramifications for the entire ecosystem. So that concerns us. And then AML-CFT risks are a big concern for us as well, because these transactions are very small, they're very fast. They're sometimes difficult to track and monitor, and the uses for which they're put as well. Although one could keep quite a good overview in terms of what it's being used for, there are opportunities for AML-CFT threats, and therefore that's a big concern. How have we addressed these and many other risks? I must say regulation, effective regulation, the design of which must be very clear in terms of which risks are being addressed and how to address these risks in a proportional manner, in a way that allows the entire ecosystem to benefit from these opportunities, while at the same time keeping an eye on the risks. And in the next few minutes, as the conversation proceeds, I'll be happy to provide some more examples. Thank you.
Yeah, that's great, Elsie. I think, of course, key issue to be discussed in this conversation is about policy trade-offs in order, how to address those policy trade-offs, how to use the different policy instruments in order to be able actually just to control probably the risk, but at the same time, obviously optimizing on the benefits that technology could actually bring. So let me now move to Siritida, also a central banker, also a regulator. And probably you would like actually just to tell us a little bit about, not about the overall trade-offs, but maybe about the instruments that you feel are probably more effective in sort of promoting in a safe manner financial inclusion. What should be the right balance between regulation on one side, the provision of public infrastructures and other public goods? How do you see this? A selection of instruments with the financial inclusion perspective in mind.
Yes, thank you, Fernando, and good day, everyone. I would like to highlight a key area where technology has a significant role in improving Thailand financial inclusion, especially in the area of payments and access to capital. Firstly, I have to mention that Thailand is primarily a cash-based economy with high mobile phone penetration rate of almost like 2 times of the population. It's just like one person has more than one mobile phone number. And 6 years ago, we have developed a new payment system infrastructure called PromptPay, which is the real-time retail fund transfer system that facilitates easier digital payment through mobile phone by allowing the use of mobile number or citizen ID number as a recipient address instead of bank account number. And this service allows convenient payment anytime, anywhere with no fee. And I may say that PromptPay has been a game changer for Thailand financial activities. By having the convenient and cheap payment services, the adoption rate has been growing rapidly. The average of usage volume going up to more than 20 million transactions per day, with the value at around 74 billion baht or around 2.3 billion US dollar per day. And we have seen the payment activity at the bank branch has reduced significantly. This led many banks to close their physical branch to about like 10% of total branch throughout the country, which was allowed 700 branches within 2 years. Banks can benefit by reducing their operating costs, including cash handling and fixed costs. And in addition, PromptPay has played a crucial role in supporting Thai economy during the pandemic crisis, as it became the main channel for government assistance program to those impacted people, where there were like 7 million new PromptPay registration, or approximately 15% increase in the year 2020 alone. And by having a PromptPay service, people can still live their normal daily life by making bill payment, doing online shopping, or transfer money to family and friends without a physical touch. And moreover, PromptPay also helps reorganize the public database and create digital footprint for all, which will finally improve access to capital. For example, people without regular income or collateral or a previous financial record can leverage on this payment data and other alternative data to apply for loans. And looking into the future, I think that although PromptPay is very efficient for retail payment in Thailand, and we still see other alternatives like a central bank digital currency as an important future infrastructure. And we think that we can have a significant role in the retail and wholesale payment in the future.
So many thanks for this. I think you have very well explained how infrastructures could actually help financial inclusion, and also the role of CBDCs. We'll come back to that, of course, in a minute. But what about regulation? Have you found the need actually to develop your regulatory framework in order to properly address potential risk and therefore to facilitate an orderly adoption of new technologies with a view of favoring financial inclusion?
Yes, I think that for the regulation, I think we have to be more flexible and try to understand the risks of the new technology and innovation, as the DG mentioned earlier about the cybersecurity, and also the AML-CFT is the most important that we have seen. And also the data privacy is also the regulation that we put more focus on that. And we have the new regulation like the Act for the Data Protection Act to handle this issue.
Okay, many thanks again. That's something that I would like to dig deeper in future rounds in this conversation. Right. So let's now move to Tanja. She comes from the private sector. She has much experience in developing projects to introduce central bank digital currencies. So I think you are extremely well placed to tell us your perspective about the role that CBDCs could actually play to facilitate financial inclusion. And in particular, you may want actually just to be more specific than that and try to tell us how do you feel we should actually select the right features of the CBDC projects for this very purpose. I must say that this is a topic which is now currently under research here at the BIS in a joint project with the World Bank. We pretty much would like to understand better actually how the design of CBDCs could actually optimize the benefits in terms of financial inclusion. But you may have already perspective on this. So thank you very much for joining us, Tanja.
Thank you, Fernando, and a good day to everyone. So let's say I am somewhat optimistic that a CBDC can advance financial inclusion if designed in the right way. So, of course, it must be taken into account why 1.7 billion people aren't financially included as of today. And here various studies show that there is a wide range of reasons behind it, starting from not having enough money to meet minimum balance requirements up to having distrust in financial institutions, as Elsie just explained. So I believe it's clear that some of them can potentially be solved by CBDC. However, others require more efforts than just putting a new technology in place. But maybe let's focus on the first of the two. And here, several design features are critical to build the basis for a truly inclusive digital currency. So first, a CBDC needs to be accessible universally, even without a bank account, without a high-end smartphone, and even without internet or network connectivity. It must be also easy to use so that everyone can participate, no matter of age, level of education or literacy. And in a simplest format, this could be, for example, achieved via a basic and affordable form factor like a smart card or a wristband. And in order for everyone to be able to participate in such a CBDC ecosystem, it of course must come with no or very low cost for the end users. And in addition, it must provide some degree of privacy to the users so it can be trusted as a public means of payment. And last but not least, of course, it needs to provide a platform for innovation and interoperability with other payment instruments to enable the private sector innovation and also finally economic growth, I would say.
Sorry. How important is for you anonymity? I think you think this is feature, of course, of banknotes. Is this something that should be transposed actually to the design of CBDCs? So I think we can live with different formulas in that regard.
Yes, I think first of all, one would have to differentiate between privacy and anonymity. So we believe that a CBDC needs to come with privacy so that it's actually used and trusted by the public. So I think that's definitely one of the core features that a CBDC should come with.
I see. Right. What about, you mentioned interoperability, of course this is key, but you mentioned sort of interoperability across different domestic infrastructures. How important you feel is actually the CBDCs to have the possibility of being used in a cross-border context, and therefore how important it's actually to work in the direction of developing sort of cross-border interoperable CBDC projects?
I mean, that's also a very important point. On the one hand, of course, interoperability on a country-specific level with different payments instruments is necessary. But of course, a CBDC also needs to come with standards, so it can be also used in a cross-border context. So in the near or mid-future, it will be also possible to exchange e-Naira with the ECD and so on. So I think that's definitely something that needs to be considered into the design of the CBDC, and that needs to be incorporated into the planning of the technology as of now. Yeah.
Of course, the issue here is whether everything's about technology or it's something else. For instance, the different legal frameworks in different jurisdictions, the extent to which this heterogeneity or legal requirements could actually sort of provide an obstacle actually for this effective interoperability of CBDC platforms across jurisdictions. I don't know whether you have some experience on this.
Of course, also the legal considerations have to be taken in account. In the end, we at GND, we are a technology provider, so we can ensure that there will be standardization, that we are following best practice standards. But at the end, the regulation must also come from the central banks and the specific entities that work on it. And we will make sure that the technology will put those regulations into actions. Yeah.
Okay, many thanks. We'll go back to the CBDCs in a minute. So let me now go back to Elsie. I think you pretty much stress that how technologies could actually help facilitating financial inclusion. Now, when we talk about the success that we have seen so far in the improvements in financial inclusion due to the intensive use of technology, normally we take aggregate figures, right? So this is, well, how many new bank accounts we have, transaction accounts, how many people now have access to this payment or the transaction type of accounts. Now, you feel that this type of progress has been distributed evenly across different segments of the population? That will, of course, lead to the different question, which is, do you see any symptom of a digital divide of people that because of their inability actually to have access to the new, to being able to use the new technology, are actually left behind, while others are benefiting much more? What is your view about this? Differences across, whatever, and race or gender or whatever. How do you feel about this?
Thank you, and you make such a good point because, the numbers don't always tell the full story. And so what is important for policymakers and regulators is always to get more granular data and to understand the issue from a supply side, from a demand side, understanding the various segments of the market. And you're right about the fact that financial inclusion goals are being advanced. But however, if you look more closer at the numbers, you realize that there is a divide there are many divides, if you will. There is, for example, the gender divide, where in developing countries, in sub-Saharan Africa, for example, and in Ghana, women lag behind by about 8 or 9% compared to men in access to finance, even traditional financial services. And then you talk about youth populations. The majority of our populations in sub-Saharan Africa are youthful, and so you have, and then the aged who may just not have access at all. And so it's a different story when you go a little bit more granular. And then when you get into the realm of digital financial services, I keep saying that some of the same barriers that affect those who lag behind in access to finance also affect them here. And then you have more barriers, in particular, the fact that many of them do not have access to a mobile phone, or if they do, don't have power to be able to charge their phones, or do not have the ability to pay for data services from a mobile network operator to be able to stay online and transact businesses. And then you have the fact that research shows that sometimes women and the aged are not quite nimble when it comes to playing around on the phone and accessing these services. And so those raise additional concerns from a policy standpoint that need to be understood and need to be addressed. In particular, financial literacy programs need to add on a layer of digital literacy training. And then one needs to look at infrastructure issues, access to mobile phones, access to internet connectivity, and the like, and the cost of it. And so you come to competition rules and how these markets function. And then I talked about fraud and other matters and how regulation can address those. But then a lot more needs to be done to show that these services are services that have come to stay, that can be trusted, that are backed by policy and regulation, and the fact that the consumer has recourse, for their complaints to be remediated through the system, and therefore create more confidence in the use. So yes, I do agree with you. There is such a thing as a divide, and many divides, I would say, but in particular, a digital divide. This morning, I've been talking about a digital gender divide as well, and then you can talk about a digital aged divide and all of that. So there are these micro issues that then really need to be addressed through effective policy and regulation. Thank you. Thank you.
Yes, thank you very much. I think this discussion already shows the complexity, right, of the sort of the or to identify the right policy approach in relation to this. As you said, Elsie, I think we have to go beyond actually the overall picture. We have to see what is actually the implications of technology, of the use of technologies for different segments of the population. And maybe we have to tailor our policy response actually to each of those groups, because of course their needs may be completely different. And in the previous exchanges, actually we also saw that there are important policy trade-offs, right? I mean, there could be risks in terms of consumer protection, in terms of AML-CFT, so market integrity, more generally, if you want to talk about that. Certainly cyber threats. So there are some relevant policy trade-offs that policymakers have to face in order to be able to put together consistent policy agenda that will achieve the two objectives, basically optimize benefits of technology for financial inclusion, while at the same time, obviously, addressing the new risks. So I would be interested in probably Elsie and Siritida, both of you actually, just to expand a little bit more on those trade-offs, how different policy instruments could actually be combined in order to face those trade-offs. So why don't we, Elsie, why don't you just go ahead and expand a little bit on these matters that you already touched upon in your first intervention.
Thank you, Fernando. So yes, these trade-offs are real. I give you one example in terms of wanting to promote more competition and innovation in the ecosystem, and wanting to include new entrants in the payments system to provide more cutting-edge solutions that would deal with some of the micro issues that I talked about for various segments of the market. We have, for example, dealt with the growth of the fintech industry and the fact that these are typically young, unstructured, very small, very nimble operations that are extremely innovative and creative and are helping to solve real problems, But to be able to be effective, they need access to the payment system. They need to connect somehow in the payment system. They need to be able to provide their service. How do you do that? How do you bring in institutions that are very small, that may not necessarily have the technical and the governance structures in place, and even the capital that's backing their operations? And how do you encourage them into a system that you want to get from many standpoints, from a stability standpoint, from a consumer protection standpoint, from a financial integrity standpoint, and the like. So what we've done, for example, is to create a whole legal framework, thanks to an act of parliament, that allows us to license certain hitherto institutions that were hitherto not in the payments system, the formal payment system. These are the fintechs. We license them as payment service providers, but their mandate is very restricted. They do not provide financial services. They do not provide savings or credit or other such services. They provide payment solutions for the banking system. And so they're licensed, but their license allows them, well, for some of them, to partner with banks and other licensed financial institutions to provide innovative goods and services, products and services to the market. What we've done is to tier, if you will, that space, that sector, so that for the bigger advanced ones like the mobile money issuers who operate mobile money, the big ones, these are usually telcos or subsidiaries of telcos, we allow them to do more. We allow them to provide more service, not financial services still, but we allow them more access to the infrastructure, the payments infrastructure, because they've got what it takes from a technical standpoint, from an internal control standpoint, and all of that, and risk management standpoint, to be able to connect directly to the payment system. For the smaller ones, we do not allow them to connect directly. They need to connect through the more advanced fintechs that are licensed as enhanced payment service providers. So that's one way in which, for example, we're marrying the multiple policy objectives of allowing more innovation and competition and providing more access to finance in more innovative ways, at the same time safeguarding the payment system. So that's just one example. And the idea that we insist that licensed financial institutions are the only ones who provide financial services. So these are some of the ways we've done it. When it comes to KYC, AML, CFT, we have taken our requirements and also tried to, tier them up in a way that allows very small transactions on the back of mobile money to be done with very little KYC requirements. But then we restrict the transaction sizes, we restrict the limits. We have limits on transaction size, on daily limits, and we keep track on these transactions. So we've tried to marry some of these objectives. The other thing we've done is ourselves as a central bank to invest in infrastructure, in public goods, in addition to regulation. We've invested in, for example, an interoperable framework and infrastructure in the payments system through a wholly owned subsidiary. All the telcos, all of the mobile money operators, all of the fintechs, except those who are too small to connect directly to it, and all the banks are connected to this interoperable framework. Now that allows seamless transfer of money across the system, across all networks, across from banks to mobile money and vice versa, and it's seamless, it's cost effective, it is quick, and all of that. That is also a concentration risk in one system that takes care of the entire ecosystem, but it's a wholly owned subsidiary that we have every confidence in the way in which it's run, in the way in which it's managed, and we subject it to full regulation as well on an arm's length basis. And so here are some of the very practical ways in which I believe we have tried to marry, the trade-offs, and to take positions along that trade-off curve that inures to the benefit of our economy at this stage. Thank you.
Thank you very much. I think it's a very good explanation of this combination of the use of different policy instruments, particular regulation on one side and the provision of public goods on the other. But just one question about this sort of new entities actually providing those payment services. You mentioned that, well, you typically restrict the type of services that they can actually provide for the sake, obviously, of protecting other public policy goals. That's very clear. You focus very much on payments. What about credit underwriting? I mean, is something that should be is kept reserved? It's only something that banks could actually provide, or you are more flexible about this?
Now, so like I said before, savings accounts, deposit mobilization more generally, and credit, as far as we're concerned, are for licensed financial institutions. And so banks, not just banks, but we license banks, we license savings and loans companies, we license microfinance companies, and a number of rural and community banks. These are all licensed as deposit-taking and credit institutions. And we regulate them as such. We don't allow fintechs to offer these services. What we allow fintechs to do is to develop the applications, the algorithms, and all of the other back-end, solutions that help these licensed financial institutions to provide credit to their customers. So for us, it's a matter of our regulation being technology neutral. You're licensed to offer credit as a bank or as a savings and loans company, and whether you're doing it through a brick and mortar branch operation or whether you're doing it through technology, it is still a financial service that you perform. However, we allow you to partner with a technology provider that enables you to provide this through a medium of technology. And we take a product approval or a product regulation approach to that. So we do approve those partnerships. We do approve the parameters within those partnerships. And we say, for example, that although money is lent on the back of a mobile money wallet, the underlying cash is held with a bank, and it is the bank's balance sheet that has that asset, that credit that's just been given, and it's the bank that's supposed to do the work. They could use a credit scoring algorithm that is developed and shared by a fintech partner, but it's the bank that takes responsibility and ensures that it conducts all the risk management protocols it's required to adopt. So we have quite a clear division of powers, of responsibilities in that ecosystem. Right?
Thank you very much. Very, very interesting. The same question to you, Siritida. I mean, how do you actually sort of address in practice the relevant trade-offs? First, what type of trade-offs do you find particularly relevant in your case? What policy instruments are now using in order to address those trade-offs?
Thank you, Fernando. When we talk about the innovation, I don't think that it is the policy trade-off. I think that in the fast-paced developing environment like nowadays, policymakers need to be more flexible, and so do the regulation. We believe that it is the question of how to give the right balance between development and resiliency, not a trade-off between the two. And regulation, we see that it needs to be more flexible enough to accommodate rapid change, while at the same time have enough safeguard to ensure the soundness of financial system as well as consumer protection. Regulator therefore must be more forward-looking than ever before and remain in close collaboration with the industry in order to understand and keep up the fast change. So it is important to understand the risks and any potential impact associated with the innovation so that the regulation can be amended or revised accordingly. In case of Thailand, we has also played a role of innovation facilitator through the regulatory sandbox, which we established 6 years ago. And right now there have been 30 successful test projects that already exit the sandbox, and another 45 projects currently testing in the sandbox. It's the collaboration between banks and non-bank and also the fintech. And what we learned from the close collaboration through those tests, have guided us in launching 3 industry guidelines. For example, we have outlined the benefit and risks associated with the standard QR code for payment, the biometric technology and blockchain, as well as what should financial service provider be conscious of when using this technology. And also that we are formulating the API guideline for the financial service industry also. So we think that work closely with the service provider, financial service provider will enhance our understanding about the risks, and we will adapt it to improve our regulation later.
Yeah, it's interesting that you are somewhat optimistic about those trade-offs, and basically that by properly using the right policy instruments, I don't have to sacrifice one objective to facilitate the other. But of course, there are areas in which this is hard to do, right? I mean, I think Elsie was referring, for instance, of the area of AML-CFT, which we know actually that particular set of rules, though that regulation may have implications from the point of view of financial inclusion, right? I mean, it's something which is pretty much linked to the ability by different segments of the population actually to have access to bank accounts or to transaction accounts. There is always an identification issue, and all that stuff. I think Elsie mentioned sort of an approach which is essentially to believe in the principle of proportionality, so that depending on the type of transaction, you may be more or less stringent. And it's a good way to try to obviously address those trade-offs. Is something that you feel is relevant in your jurisdiction, Siritida? How do you go about application of the principle of proportionality, particularly in the AML-CFT arena?
And for the AML-CFT, I think that we put the most important on this issue, because we understand that the safety net for the system is the most important thing, and we have to look after the safety of the financial system. So for the AML-CFT, I think that we don't have like a proportionate in this regulation, but for like and we also that develop like a KYC platform in order to the small financial service provider can access and have the way to do the KYC across the industry.
Oh, very interesting. So it's a different approach. It's not about working with the rules themselves, but working more on providing this sort of a common infrastructure that could help institutions to conduct the KYC requirements. I think it's an interesting complementary approach. Right. Okay. So let's go back to this fascinating world of CBDCs, Tanja. So I think your experience is quite valuable in sort of promoting this sort of partnership with central banks. So tell us a little bit about this experience. I mean, what will be the right formula in order to join efforts from the private and the public sector in order to put in place a successful CBDC project? What challenges you have found along the way, and so whatever, I mean, what type of experience you could actually share with us in relation to this?
Yeah, thank you, Fernando. Happy to do so. So I believe public and private sector collaboration is actually key to success of any CBDC initiative. And it's really important, and that's also a lessons learned, to include relevant stakeholders as early as possible in such projects, not only to create a broad knowledge base among these institutions, but also to enable the local commercial banks, non-banks, and fintechs to participate in such a CBDC ecosystem and innovate on top of it. So it's clear that interoperability between CBDC and existing payment instruments is critical as a success factor for widespread adoption, because only if there's a seamless and universal accessibility and interoperability with other means of payments, there will be a driving factor for adoption and inclusion. And that being said, a CBDC requires a close collaboration between the public and the private sector, for example, to integrate, but also to learn from each other. For example, what learnings can be derived from the mobile money sector that already enabled millions of people without a bank account to make digital payments, and what worked well, and what are the limitations that might be now tackled with a central bank digital currency. And in our CBDC pilot project with the Bank of Ghana, the collaboration with payment service providers and banks was a priority from the very beginning. And such institutions will also play a critical role in further phases of the project to provide services around the ECD. So our underlying CBDC protocol enables the private sector players to integrate the CBDC functionality via software development kits into their existing payments infrastructure, as well as building new applications on top of it. Because in this way, you can create consumer-centric applications that take into account the local user behavior, requirements, and also the common payment patterns. So that's one of the lessons learned. And also, of course, to summarize, it's crucial that both the public and the private sector are aligned on the goals for digital currency and work together to convince the end users to actually adopt and use it.
Thanks. That's very, very interesting because, of course, when you talk about CBDC with the private sector, they get a little bit nervous, actually, particularly commercial banks for obvious reasons. If I may, Elsie, can you give us your perspective as the other counterpart of this joint venture in developing a CBDC in Ghana? What is your experience in cooperating with a private company in developing the project?
Well, it's quite early yet, but so far I'll say that the private partner we had was one that happened to have been a long-existing partner of the Bank of Ghana through their support for our currency operations. So they've been a supplier of equipment and systems to us over the years. And so it was already a good long-standing relationship, which we're both beginning to move a step further in exploring together in this very new venture. And so far, it's been very collaborative. It's been very it's been a learning experience for all of us, I must say. And we're learning also from what's going on around the world and continuing to calibrate our model and our approach as we go along, learning the lessons that others are already beginning to learn. And so that's about it. But like I said, the relationship was already there. So thanks.
Unfortunately, we are actually exhausting our time. That's a pity because, of course, this exchange is becoming extremely rich. So we have less than 1 minute per speaker for rounding up, but to wrap up and tell us something that you would like actually to share with the audience at this stage. Maybe if I may actually try to steer this a little bit, I would probably ask maybe Elsie just to tell us something about what specific plans you have in your jurisdiction for financial inclusion. And the same question will be for Siritida. And then maybe for Tanja, something about other potential innovation could be helpful in the area of financial inclusion. Again, you have to be extremely brief, maybe just 3 or 4 sentences, not more. Sorry about that.
Okay, so one of the big things we're doing is getting more granular with the help of data to understand, the various gaps in access to finance. And we believe that rolling out that kind of a data collection and monitoring tool will then allow us to be more specific as we go along in calibrating our policy and regulatory framework. We also continue to build infrastructure and enhance the public good in terms of the interoperability framework, and now the CBDC. And so those we believe will be very critical for further enhancing financial inclusion going forward. Thank you.
Many thanks, Elsie. Siritida?
For the Bank of Thailand, recently we have released a new financial landscape consultative paper which include the new payment system roadmap, digital sustainable banking, and ESG. And our paper is talking about three openness. It's about more open data, more open infrastructure, and more competition in order to meet our goal. And we think that with three O's, we call three O's, it's help us to promote collaboration and compatibility between players in the industry with the support of appropriate infrastructure, and will help the inclusion in the future.
Many thanks, Siritida. Tanja, last word.
Yes, last word. So I believe when it comes to technology that can help financial inclusion, of course, we should look into digital identity solution and leveraging data footprints to help people to bring them into the financial system. And of course, other drivers could be government-generated demand through welfare payments in CBDC, or, for example, dual offline payments where the payee and the payer can be offline and exchange money. So I believe that will be the main drivers in the future. Thank you.
Thank you. Thank you very much, three of you. I think extremely insightful remarks. I think we have learned a big deal. We have covered different types of issues. We have identified well risks and opportunities that technology could bring in order to facilitate financial inclusion, possible trade-offs that authorities have to face, how authorities should go about combining regulation with the provision of public goods in order to put together a consistent policy approach in relation to this important matter. And within public infrastructures, of course, we have actually exchanging views as well on the role of central bank digital currencies. Again, I think has been great. I have learned a lot. I appreciate very much your remarks. That's all. All the best. Take care.